Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin is testing major support levels amid extreme market fear, while Bitcoin ETFs experience massive outflows and geopolitical tensions trigger crypto liquidations. Bitcoin has fallen below $94,000 for the first time since May, currently trading at $95,462. The Crypto Fear and Greed Index has plunged to just 10 out of 100, marking extreme fear conditions. This represents a 25% decline from Bitcoin's October peak near $126,000. Technical analysts are warning about a death cross pattern forming, where the 50-day moving average crosses below the 200-day average. However, historical data shows the previous 3 death crosses actually marked local bottoms rather than further declines. The next major support sits at $92,500, with analysts watching to see if Bitcoin can stabilize or if we'll see another leg down toward $88,500. Bitcoin ETFs just experienced their second largest outflow day ever. On November 13th, $867 million fled spot Bitcoin ETFs, with BlackRock's IBIT losing $257 million and Grayscale's Mini Trust shedding $318 million. This caps a brutal 3-week period with $2.6 billion in total withdrawals. The timing coincides with growing uncertainty about Federal Reserve policy, as markets now see only 50-50 odds of a December rate cut. Despite the exodus, total Bitcoin ETF assets remain above $80 billion, so we're seeing profit-taking rather than structural collapse. Meanwhile, Michael Saylor delivered bold statements about MicroStrategy's resilience. Speaking with Grant Cardone on November 14th, Saylor claimed the company could withstand a 90% Bitcoin crash before facing serious collateralization issues. With approximately $8 billion in debt against tens of billions in equity, Saylor says equity dilution would occur before any Bitcoin liquidation. He dismissed the traditional 4-year halving cycle as no longer relevant, arguing that institutional flows now drive Bitcoin's price. President Trump dropped a bombshell on markets by supporting a proposed Senate measure authorizing tariffs up to 500% on imports from countries buying Russian energy, particularly targeting India and China. The announcement triggered immediate chaos, with nearly $620 million in crypto liquidations within 24 hours and over 152,000 traders forced out of positions. Bitcoin dropped 1%, Ethereum fell toward $3,000, and major altcoins like XRP, Solana, and Cardano saw sharp swings. Analysts project potential 10 to 20% declines if these tariffs are implemented. Finally, the International Consortium of Investigative Journalists just released a major exposé called Coin Laundry, documenting how criminal enterprises are exploiting major exchanges including Binance, OKX, Coinbase, Kraken, Bybit, and KuCoin to launder illicit funds. Over 100 journalists from 35 countries traced criminal proceeds from North Korean hackers, Russian and Chinese gangs, Mexican drug cartels, and fentanyl dealers moving money through these platforms. The investigation reveals a shadow financial system operating beyond the reach of regulators. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.